Hey guys, it is Julie here with JT Wealth. In today's video, we are taking a look at 3 REITs that have great dividend payments, but also have some opportunity for growth. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we are discussing REITs, or real estate investment trusts. Specifically, 3 top dividend stocks with growth opportunities according to Goldman Sachs analysts. So in today's video, we're going to take a look at these 3 companies, what they do, and what room for growth that analysts think they have. But also stick around to the end because I'm going to share with you what type of investment accounts are best suited for REITs like these. And just before we get into all of that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Also, don't forget to check out some of the great links in the description as well. This includes a link to one of my favorite resources, which is TipRanks. And their free platform has a ton of awesome resources. But if you're considering signing up for the premium or ultimate plan, which come with some great perks, make sure you use that link down below to let them know that I sent you. All right, now let's talk REITs. As REITs, or real estate investment trusts, are known for paying a fairly high yield, reliable dividend. And with that, you don't expect a ton of annual growth. But the 3 REITs that we are taking a look at today all have double-digit potential growth over this next year. The first REIT that we are taking a look at today is Broadstone Net Lease. They trade under the ticker BNL and are currently at $18.76 per share. Their dividend yield is currently 5.51%. Now, this REIT just went public this past September in an IPO that raised over $533 million. Broadstone Net Lease is an internally managed REIT that acquires, owns, and manages primarily single-tenant commercial real estate properties that are net leased on a long-term basis to a diversified group of tenants. The company utilizes an investment strategy underpinned by strong fundamental credit analysis and prudent real estate underwriting. Their portfolio consists of 627 net leased properties in 41 U.S. states and 1 property in Canada with 182 tenants and 169 brands, diversified by geography and industry. Their aggregate gross asset value is approximately $4 billion, and their tenants include well-known industrial, healthcare, restaurant, office, and retail brands. Broadstone has been seeing some substantial growth in these last few years. And since 2015, they have seen about a 30% compound annual growth rate of their gross asset value. As we said, their tenants are highly diversified between industrial, healthcare, restaurants, office, and retail space. Some of their top tenants include companies like Red Lobster, Hensley, Outback Steakhouse, Aventive Technologies, Tractor Supply Co., and Zips Car Wash. During the 3rd quarter, BNL reported a net income of $9.7 million, or 8 cents per share. The income came mainly from rents, and the company reported collecting almost 98% of rents due during the quarter. Looking ahead, the company expects over $100 million in property acquisitions during Q4 and an increased rent collection rate of nearly 99%. Goldman's analyst Burrows sees these acquisition moves as the most important factor here. Accretive acquisitions are the key earnings driver for Broadstone. While management halted acquisitions following the coronavirus-induced market uncertainty, as BNL did not complete any acquisitions in the first half of 2020 and ahead of its IPO, we are confident acquisitions will ramp up in 2021 and saw the beginning of this with their Q4 2020 activity. We estimate that BNL achieves a positive investment spread of 1.8%, leading to 0.8% of earnings growth for every $100 million of acquisitions. She rates the stock a buy, and her $23 price target would imply about a 27% potential upside over this next 12 months. And there are 2 other analysts that currently agree with her buy rating, as the BNL stock comes in as a strong buy, with an average price target at $21.33 for just over a 17% potential upside. Next up, we have one of the most well-known REITs out there, and that is Realty Income Corporation. They trade under the ticker O and are currently at about $60.41 per share with a dividend yield at 4.7%. Realty Income is a major player in the REIT field, and they've actually achieved over a 15% compound average annual total return since their 1994 New York Stock Exchange listing. They've also seen over a 4% compound annualized dividend growth since that same 1994 New York Stock Exchange listing, along with 93 consecutive quarterly increases and over 600 consecutive monthly dividends paid. They have over 6,500 properties under long-term net lease agreements with over 600 different tenants across 49 states, Puerto Rico, and the UK. Now, Realty Income is known for having some incredibly well-known names as their tenants, and their top 20 tenants represent over 52% of their annualized rental revenue and includes companies such as CVS Pharmacy, Circle K, Walmart, FedEx, Dollar General, Walgreens, and 7-Eleven. As far as their year-to-date 2020 results, they've seen about $1.3 billion in acquisitions and have 13 years weighted average lease terms on those new acquisitions. They ended the quarter at over 98% occupancy as well. Hearing once again from analyst Burrows at Goldman Sachs, she says that this stock is on her America's conviction list and says that we estimate 5.3% FFO or funds from operation growth per year over 2020 to 2022 versus an average of 3.1 for our full REIT coverage. We expect key earnings drivers will include a continued recovery in acquisition volumes and a gradual improvement in theater rents in 2022. She has a buy rating on this stock with a $79 price target, which would imply over a 30% potential growth over this next year. Overall, the Realty Income Corp stock comes in as a strong buy, with 5 buy ratings and 1 hold rating. The average price target is $69.80 for about a 16.6% potential upside over the next year. And last but not least today is Essential Properties Realty Trust. They trade under the ticker EPRT and are currently at $20.60 per share. Their dividend yield comes in at 4.69%. Essential Properties invests in triple net lease properties across the U.S., and they acquire, own, and manage primarily single-tenant properties leased to middle-market companies operating service-oriented and experience-based businesses. They've assembled a diversified portfolio with over 1,000 properties, including 214 tenants across 16 different industries, and have an impressive occupancy rate of over 99% of their properties being leased. Their top 10 tenants occupy about 236 of their properties and include some big names like Captain D's, Popeyes, Mr. Car Wash, and Driver's Edge. In Q3 of 2020, the company saw revenue increase of 18% year over year, reaching $42.9 million. Essential Properties finished the quarter with an impressive $589 million in available liquidity, including cash equivalents, and available credit. The strong cash position and rising revenues had the company confident enough to raise the dividend going into Q4. In her review for Goldman, Burrows focuses on the recovery that Essential Properties has made since the height of the pandemic this last year. When shelter-in-place mandates went into effect in early 2020, only 71% of EPRT's properties were open. The situation has improved in the intervening months now, and just 1% of EPRT's portfolio is closed. We expect EPRT's future earnings growth to be driven by acquisition accretion and estimate 2.8% potential earnings growth from their $100 million of acquisitions. Along with this, she rates the stock a buy with a $26 price target, which would be about a 27% potential upside over this next year. And the EPRT comes in as a strong buy overall, with 8 buy ratings and 1 sell. The average price target is $22.89 for just shy of a 12% potential upside. So there we have 3 REITs, all with solid dividend yields and the potential for some growth in their future as well. Now, I also want to address just some of the differences in how REIT dividends are treated in terms of taxation and which investment account it makes the most sense to hold these REITs in. So let's start off with the fact that when it comes to dividends, REIT dividends typically don't qualify for the favorable tax treatment most stock dividends do, and their dividends can be rather complex, as there are three main types of distributions that REITs can make: ordinary income, long-term capital gains, and return of capital. Now, most of the money distributed by REITs is considered ordinary income. Generally speaking, any distributed operating profits is considered to be an ordinary dividend. Now, this is important for REIT taxation, as for the most part, REIT dividends don't meet the definition of a qualified dividend. So in a nutshell, this means REIT income taxation is at your marginal tax rate or tax bracket. So in regards to taxation, the best place to hold these REITs is in an account where you can avoid taxation altogether. Since REITs not only tend to have above average dividend yields, but are also taxed at those higher rates and can be quite complex, they're perhaps the best type of dividend stock to hold in a tax advantage retirement account like an IRA. If you own REITs in an IRA, you won't have to worry about dividend taxes each year, nor will you have to pay taxes in the year in which you sell a REIT at a profit. In a traditional IRA, you won't owe any taxes until you withdraw money from the account. In a Roth IRA, as long as your withdrawals meet the IRS requirements, you'll never pay taxes. So if at all possible for you, it is the best to hold REITs like this in a Roth IRA to avoid taxation altogether. Just make sure you chat with your financial advisor to understand all the rules and guidelines of a Roth IRA and to make sure that you qualify. As you guys know, I always love hearing from you, so make sure to leave your thoughts down below in the comments. What do you think of these three REITs, or what are some of your other high dividend paying companies? Keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for entertainment and information purposes. Any investment decision needs to be made based on your own research and due diligence. If you made it all the way to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful day, and cheers.